everyone, welcome and thank you for joining us for today's webinar. Having some technical issues. Welcome to today's webinar, Why Financing is Becoming a Major Key to Closing More Jobs. My name is Jenny Silvers and I have Steve Eastlack next to me, and he is ready and excited to help answer your questions. Today we're here to talk about the role that financing can play in the sales process and when it's the right time to introduce financing as an option to your customers. We're very excited to welcome Bruce Christensen to speak on today's webinar. He has 30 plus years of financial services experience, and he specialized in the home improvement industry for the past 16 years of his career. He has a great presentation for you today, so pay close attention and stay tuned to the end where one of you will win a Google Home Mini. If you have any questions for Bruce during the presentation, you can communicate with us using the question box in your webinar control panel on the right-hand side of your screen. Why don't you go ahead and see if you can locate that right now and type in where you're joining us from today. With that, you can take it away, Bruce.
Thank you, Johnny. I just wanted to start out, we talk about home improvement financing, but really kind of what's happening with the economy. It's been very robust. And in fact, just today, the residential remodeling index came out and just released that for 25 consecutive quarters, there's been year-over-year gains as it relates to remodeling and home improvement. And the Q2 of 2018 is up 5.2% year-over-year, which is actually pretty huge. So the question becomes, are you actually maximizing that growth? I mean, are you growing at 5.2% or are you leaving some on the table? So today's conversation is going to be about how do we leverage the home improvement financing to ensure that you are participating in all that growth. So just a few things we're going to go through. First of all, why should I have financing? A lot of folks always have, there's always some type of objection. So we'll talk about that a little bit. I'll cover with you the difference between revolving and installment, what's the best thing for you, the different loan types that are available, and then monetizing financing. Like how do you take a look at it and say, okay, well, I'm going to pay more to offer a credit promotion, but how do you monetize that and actually see that it's better for you? And then what to look for in a lender, and then ultimately who are the lenders? So why do I need financing? First thing I've heard over my many years, too many to say, is that I hear people say my customers don't need financing, they pay cash. But the reality is this: your customers are using financing for other large ticket items like cars, boats, furniture. I mean, there is a reason, even with your high-end customers, that BMW, Audi, Porsche, all these companies in the car business, and then even with the bigger boats, they all offer finance. They do it even though they know their customers are high-end customers. Second thing is customers have separation anxiety. And this is something that I have personally, and I think a lot of you do too. It's really hard to write a check for $10,000, $15,000, $20,000 and just hand it over to somebody. So if you get some type of a credit promotion, it makes it easier to make payments, even if it's at 0% interest, than it does to make that big check. And a lot of customers have that separation anxiety. And then, like I said, most people who have and can pay cash, they're using other people's money. And there's a reason that they are in that financial situation, because they're leveraging the fact that there is other ways for them to pay for things and then keep their money in investments or wherever else they want. When you look at customers that say that they've already secured their own financing, this is a very slippery slope, because as a contractor, even if they do, you don't want to lose control of that sale. So what happens if they have secured their financing and they have $10,000, $15,000, $20,000 already set up that they are going to use for their home improvement project? That gives them the opportunity to shop you. So they're going to go out and may try to find another contractor. They're going to try to find a better price. They're going to try to find, typically it is price driven. Or now you're also competing with whether or not they want to buy a new boat, a new car, something else that is a large transaction. And also if they complete an application and theirs ultimately doesn't work, you can come back to them and say, look, we may be able to offer you a better financing solution. We may be able to offer you better terms. We may be able to offer you some type of a credit promotion to where you don't have to pay interest. But ultimately, at the end of the day, you want to have control of that sale. And that takes us into the last one of what if my customers say that they just refer over to another financing, a bank, a credit union. Once again, you've lost control of the sale. And what you want to do is get that wrapped up while you're in the home at the kitchen table. And you don't know what that bank representative is actually saying. You don't know if they're saying, you know what, that bid is probably too high. Maybe you should get more bids. You don't know if other contractors are being referred in. You don't know. You lose control. And the worst thing you can have is for them to advise that your price may be too high. And then just this last takeaway that we've had for the last few slides, and this is pure data driven. The average finance sale is 10 to 15% higher than a cash sale. So we're going to talk about monetizing in a few slides to where you'll see how that really does make a difference, even if you believe that financing costs you too much to be able to offer those different credit promotions. So let's talk about the two different loan types. Within the industry where they are not secured, because there are home equity loans that are available, but your unsecured loans to where you're actually able to close at the kitchen table. You have installment loans. An installment loan is a specific term, and it's best used when you have transactions where you're not going to have any opportunity for a repeat. A good example of that might be a brand new kitchen, because you're not going to have a situation where the customer is going to need another kitchen. Another opportunity might be a roof. You're not going to put a second roof on. Revolving, on the other hand, is a line of credit. So everything is open-ended. A great example of where the best use revolving might be in the heating and air conditioning business, because you're going to sell. It's got a higher repay, and your repeat, and you're going to sell service contracts. And those service contracts could be on an annual basis, or you come back for repairs. And now they have an open line of credit to where you can just put that on. So it really depends upon the product that you're selling, and it depends upon the propensity for a repeat sale. So let's talk a little bit about monetizing the financing. And I'm going to take you through the numbers. And I would ask that shoot questions to Jenny, because this might be something that we want to talk about a little bit later. But just using a baseline of 10 leads. If you have a cost of leads at $300 each, which is a round number and pretty much in the ballpark, for those 10 leads, you're going to spend $3,000. On average, out of those 10 leads, you're going to close 2 without financing. With financing, the data supports that you're going to have a 12.5% increase on your close rate, which would take you to 2.25 closings with financing. Your attrition, when it comes to without, is going to be about 10%. And those that drop out, as it relates to with financing, are about 5%. So just those two numbers between the increased close rate and your drop in your attrition rate, you can already see that the numbers look better in terms of your average deals sold out of those 10 leads. You're looking at 1.8 versus a little over 2. And the reason your attrition is down is because once that consumer has taken financing through your program, they're more committed to the sale. So therefore, you have a much better chance that they're not going to back out. Your average ticket price without financing, where you can just use a basic $10,000 with financing, the data also supports you have a 10% higher ticket size. You're at $11,000. Those numbers then will generate a sales revenue on those 10 leads of $18,000 without financing, and a little over $23,000 with financing. When you look at the overall cost of the 10, 20% on average are gonna be cash sales. So you don't pay anything for that, and then 80% are going to be credit card sales at an average cost of 3%. You're looking at $432. When you look at the cost with financing, you're going to have a reduction in the cash sales because you're going to have some cash buyers. They're going to move over to the promotional sales. So you're down to 15% at cash at no cost. Then you're at 55% credit card sales because you're going to take financing is going to take away from those credit card sales. But those are still at 3%. So you're looking at about almost $400. And then 30%, which is pretty standard for companies that are using financing, are going to be promotional sales. And by promotional sale, I mean it's a 12-month deferred. It could be a longer-term low payment. There's a number of different promotions, but on average, you're going to pay about 5%. So your cost there is going to be about $350. The total between the credit card sales and the promotional sales comes out to be about $740. When you take that $740 against the $23,000 in sales revenue versus the $432 against the $18,000, still using your lead cost of $3,000, your lead to financing cost of sales without financing is going to be about 19%. With financing, even though those costs are higher, you're going to be at about 16%. When you take that all in, your total net revenue of 10 leads without financing is going to be about 14.5, and with financing it's going to be about 19.7. So hopefully with seeing the numbers and how that works, that all makes sense. I've sat down with multiple contractors and gone through the numbers with them, and you can plug and play your own numbers into this formula, and it will actually, you'll be able to see for yourself. The data will support that using financing versus not using financing ultimately is going to be better for your business. So I'm sure people are going to have questions on this when we're done. Jenny, hopefully they're coming in. We can cover them.
Yeah. If anyone has any questions for Bruce, just leave them in the question box, and we will get to those at the end of the presentation. But for now, we're going to let Bruce take a quick water break. And while he's doing that, I want to offer all of you the opportunity to continue the conversation with Surefire and find out how digital marketing can help keep the sales flowing as we start moving towards the lean season. We're scheduling calls for next week on Tuesday and Thursday. We've just opened up a poll. We understand that you have busy schedules, so if neither of those days work for you, just please email me to pick a time. You can see the Surefire Marketing Cloud in action, and one thing that's really great about the cloud is that you can request reviews from your happy customers with one click. While you're busy with all of your jobs this month, it's the perfect time to generate new positive reviews online, and our cloud makes that easier than ever. Remember to stay tuned till the end for a Q&A and to find out the Google Home Mini winner. And we'll just give it another minute, and then we'll pass it back to Bruce. Okay, Bruce, you can take it away.
So, what should you look for in a lender? There's a number of things that should be important as you're going through, and we're going to talk about those as I've got listed here. So first of all, you want to ensure that the decisions are made while in the home. Most lenders have the in-home decision with a number of different ways that they can take the application. They should be able to take it via phone and then from a mobile device, but it has to be made while in the home. And basically what that means is that they have to be able to turn a credit decision around for you within just between a minute to 3 minutes, because that is dead silent time when you're with the customer. And it's also a little bit stressful because you're wondering, all right, are they going to get approved? Are they not going to get approved? Are they going to get approved for the right amount? But they need to be fast. Second thing is you want it to be paperless. Whether it's revolving or installment, you want the entire process to be paperless so that your salespeople are not having to haul around, credit applications, returns and disclosures. The lender needs to be able to communicate directly with the consumer via email, text, just so the consumer can actually see what the disclosures are, but it has to be paper. You want simplicity for the salespeople and for the consumer. So, ultimately, data entry that goes into the credit application. Most lenders in today's market they can actually take the consumer's driver's license, take a photograph of the back of the driver's license with the code, and it will pre-fill the credit application. That's standard. You should expect to have that. And then at that point, the only other thing that needs to be entered is the consumer's Social Security number. And in doing that, you can hand your tablet or your phone to the consumer so they never have to share their Social Security number with you. And in today's age of fraud, that's a big point. Mobile optimized. And by optimized, I mean not only on your phone, but it should be working on your tablet. It should be able to work web-based so that as you're submitting credit applications, any device that the consumer has or any device that your salespeople have, they should be able to utilize it and be able to see it very clear and crisply. Promotional options. There's a myriad of promotional options. With my time at a couple different lenders, and you have options that exceed 40 to 45 different types of credit options. And you're going to have to choose what's best for you. But a no interest, a pure no interest, means that for the term of that particular loan, that consumer is not going to pay any interest and it does not accrue. The no payment is only on installment. Regulatory restrictions on the revolving programs prevent them from being able to offer a pure no payment, but they do offer deferred interest to go along with the potential no interest. And it really depends upon what you want and can afford to pay, versus having the no pay. I will tell you that no pay is very, very popular for your higher end customers. And then long term, this is all about low payment. Lenders will go from 144 up to 180 months. I have seen some that have gone up to 240 months, and that really turns it into a payment play. It's about being able to sell your product for as little out of pocket to that consumer on a monthly basis. And most consumers today still work on that month to month. How much can I afford out of my monthly budget? We'll talk about the service capabilities for your customer, your consumer. Very important that they know that from a service perspective, whether it be customer service, collection being handled properly, you want to make sure that you're with a lender that has the support team to be able to properly take care of your customer. We've all been on the phone forever for waiting on hold, and you get tired of hearing the same loop. You need to make sure that those lenders have got the personnel to be able to handle your customer inquiries. And then for your company personally, you want to ensure that there's going to be people there that can support you. Many companies will call it either a merchant service or they're going to call it a concierge service. But basically, you want to ensure that lender has you assigned to a particular person or people in a department, so that anytime you have questions, you can call in and get the answers that you need to ensure you can make a transaction. And they have to be available specifically or importantly to your salespeople when they are in the home, because a lot of times that's when the question comes up. And then field support and training. Several companies have great field teams. Several companies don't have field support at all. But training is critical, and you need to ask the questions about how do they go about training? When do they schedule it? How often do they have it? Do they have it every day? You're going to have turnover with your salespeople, and you're going to need to be able to have your salesperson get trained on how to offer financing at any given time. And then ultimately, like anything else, pricing. You don't want to overpay. And something that's very important, make sure that you understand if there's any hidden fees. There are some lenders that there are fees that you don't see, and just in the way they bill. So you need to fully understand all the different price points. So let's talk about the primary lenders. I'm just going to touch on a few of them, and I've got both strengths and opportunities, but I really want to talk more about the strengths. Green Sky is the largest in the business. They are paperless. They have solid mobile technology, and they have a very strong brand recognition within the business. But their brand recognition is not as strong as it relates to a particular consumer. They are getting better in that regard. One of the things you got to watch out for or be aware of is that for settlement, they are going to charge a MasterCard interchange fee. And basically what that means is that in order for you to be funded, you more than likely are going to be going through what we call MasterCard rails, which means that you're going to be charged about 2.5% in addition to the promotional fee that for that individual credit promotion. Wells Fargo is revolving. The positive here is that they have an open to buy. The negative is, as revolving, that they do not have a no payment. Transactions are very simple, and they have a strong field presence and a strong sales presence internally as well, having both inside and outside. But they don't have the longer term credit options, where we talked about before, with 144 to 188, and then even up over 200 months. Because as a revolver, they have a percentage. You pay a percentage of what the outstanding is. Synchrony is also revolving. They also have the open to buy. Synchrony is very strong as it relates to remarketing. So they will continue. They will market back to your customers to get them to come back in to make an additional purchase. But again, because it's revolving, they do not have the no payment. Their pricing is becoming more aggressive. They have the best field sales team in the business. Not that I'm biased at all, but a lot of those were my guys. And but then they have menu pricing on the opportunity side that could possibly be limiting, but at the same time, you can get better control over the credit promotions that your salespeople are offering. Interbank is a direct loan, so there's minimal dealer interaction. So they are very electronic, but once the application is submitted, you do lose a little bit of control. They will take the application by phone to where the consumer will actually get on the phone, and they buy a little bit tighter. Service Finance, their value prop is that they are currently the lowest cost provider. They are fully paperless. Their technology is every bit as good as Green Sky's. It's very simple. Their dealer concierge is probably one of the best, and the training is probably some of the best that you can get. And the mobile technology, like I said, transaction ease is untouched. Other lenders that are available, you have Lending Club, Medallion, Lightstream, and there are just a myriad of local guys like SunTrust or just local banks. But these five that I've identified from as far as a national lender, those would probably be the ones that you want as a primary lender. One of them. Secondary lending. So what is it? After the primary has declined it, quite often you may want to push it to a secondary lender. And there are a number of different companies that are very interested in taking the declines of the primary lenders. The word of caution here is that it is at a much higher cost. And when I say much higher cost, just for a term loan, you're going to be looking at anywhere between 10 to 20% of the size of the sale. So you have to be able to build in, if you wanted to go to a secondary lender, you have to be able to build that price in, because what's very important is that you absolutely cannot increase the price to the consumer. I cannot emphasize that enough. You cannot increase the price to the consumer. You can always offer cash discounts, but you can't increase the price. You also control whether to submit the application to the secondary lender, but understand that you have to have permission from the consumer to do that. You can't just submit the credit application to a primary, you get a decline, and turn around and submit it to a secondary without the consumer knowing that, because both lenders are going to hit the consumer's credit bureau. You may not actually get your answer while you're in the home. That's not uncommon. Sometimes it takes them longer to actually to be able to underwrite. And in most cases, deferred payment and other credit promotions, they're not going to be available, because this is a higher risk customer. And if you go to where they don't have a payment for a while, for lenders, that becomes a little scary. Secondary lenders, you're looking at Home Plus, Fortiva, Genesis, Foundation, FCC, and Castle Credit are the ones that probably are the most reputable. So this is me. My contact information, please write it down, and please feel free to contact me. Just some quick takeaways from the webinar. If you're not using financing, absolutely number one, if you're not using financing, please do. It will increase close rates. It's going to increase transactions. And I'm saying this not representing any of the finance companies that I showed to you. Just pick the one that is best for you, and you'll increase your close rates in your transaction. Second thing, offer financing on every sale. I think it's very important that you integrate financing into your 10-step process. And there are a number of places where you can interject it. You want to offer it early and often. You can quite often, through the course of a sale, if you've got it in your 10-step process and you offer it early, you can actually have the consumer pay more attention to the presentation of your product versus wondering, how much is this going to cost and how am I going to pay for it? Because if they're at the beginning of the transaction or the beginning of the presentation, they know that, oh yeah, I can get financing, so I don't have to worry about that. You'll end up getting a higher close rate. And then the last thing, make sure you understand your lender options. You want to choose the best one for your situation. And not everybody is going to needs exactly the same thing that each lender has. So take your time, understand what each lender offers, and just make sure you got the right one for you. Each one of these lenders, especially the primary lenders, every one that I listed there is going to do a good job for you. There's no question. You just need to make sure you get the one that is best for you. So Jenny, that's all I got.
Okay, awesome. Thank you, Bruce. And before we get into a Q&A and announce the Google Home Mini winner, I want to offer everyone here one more opportunity to continue the conversation with Surefire, find out how digital marketing can help keep sales flowing as we move towards lean season. Like I said earlier, we're scheduling calls next week on Tuesday and Thursday, or you could choose to have us email you to schedule your call. So, Bruce, we do have a couple questions from the audience. Reedy asks, so what finance company does all of the things that you listed out on page 13?
Page 13. None of the, I hate to say it, but none of them offer everything. So what you need to do is take a look at what are the most important things. For example, on the revolving side, they can't offer no payments. So your Synchrony and your Wells Fargo, they can't do that. And they're not going to have the long term. But they do have an open line of credit that that the closed-end lenders don't. So it depends upon what product you're selling, and ultimately, and then from a transactional standpoint, the revolving lenders are going to have typically have lower payments except for the very long term. So it's one of those things where you just have to pick and choose what's most important. All of your primaries are going to be decisions made in the home. They're all going to be paperless, and for the most part, they have simplicity. But when you get into the bottom things from page 13, you have to decide what's most important to you.
Okay. And Reedy had a secondary question. What about pre-approval for when we initially call the customer from our office?
Pre-approvals are tough. And the reason I say that is that most of these lenders will do what they call a promotional inquiry, because you cannot submit a credit application without the customer agreeing to it and have it hit their credit bureau. The problem is they're very expensive. Very expensive. So, think about in terms of, when you get, you may qualify for, whatever loan that you get in the mail through the flyers. Those are all done with promotional inquiries, but they're also typically done through a company that has generated a high quantity of them. When you start looking at trying to do a pre-approval one at a time, like I said, you're looking at some pretty significantly high costs, and you're better off just to offer while you're in the home. And the other thing too, this is something that we've always professed or tried to help contractors understand, is that the last thing you want your salesperson to go out with is, all right, this customer, we could not pre-approve this customer. How hard, or I'll reverse that. Do you think that salesperson is gonna put on the same level of presentation to a customer that could not be pre-approved versus a customer that was? Because you don't know, that person may have bad credit, but they may have a wad of cash. So you want your salesperson, presenting the same manner every single time, just like you've trained them.
Okay, good answer. And we had another question from Bill. I think you touched on it a little bit, but he wants to know, what about Home Plus finance for turn downs?
Home Plus is solid. Home Plus is expensive, but they are, that's how I can tell. They're a very solid company. You're going to get top-notch service. They ensure they take care of every single one of their contractors. So I have nothing but positive things to say about Home Plus.
Okay. Another question from Tom. He asks, what's the best way to promote to homeowners that we finance?
Oh, in every one of your advertising. Each one of your primary lenders, all of them listed, can give you advertising guidelines. Whether if you're doing, TV like with Ron Sherman, or if you're doing, mailers, if you're any type of advertising that you have, every one of those primary lenders is going to have advertising guidelines in what you can and cannot say. And if you want to promote a specific promotion, say you want to offer a 12-month credit promotion of some kind, you want to put that in there. It's good for the consumer to know that, and it doesn't take a lot of space. So, but like I said, each of the primaries will be able to give you what you need. Okay.
And we have a question from Sasha. Sasha asks, with interest rates for mortgage going up, homeowners may not be applying for home equity loans. Will this affect the home improvement jobs, do you think?
Well, I think anytime that home equity gets affected, then yes, that could slow down home improvement. But if you've got a good lender for unsecured, that the homeowner can still get what they want if you're offering that credit to them. What I will tell you, with interest rates rising, the cost and it's a promotional discount or promotional fee for you as a contractor is going to be going up. And those of you that are using financing today have probably already seen some increases from your primary lenders. As long as the Fed is increasing rates, the cost of capital is going to be going up for the lender, and then that's going to ultimately get passed on to you as contractors. But as long as you have financing, you can overcome the whole home equity thing and still continue to grow your business.
Okay, perfect. And Jacob asks, what are your tips for simplifying the process of getting your business set up with a lender?
I'm sorry, say that again.
What are your tips for simplifying the process of getting a business set up with a lender?
I think the first thing is you can go out to their website. Each one of them has got some pretty good websites, but ultimately, you can talk to other people that you know in the business that are using financing. You can get referrals from them. Hey, pick up the phone, call me, which is fine by me. So I think you can. There are a number of ways that you can find out, but every one of them, I would check out their websites and use that as the beginning of your baseline. But referrals are solid, and if you know other people that are, somebody says, hey, I'm very happy with XYZ, you may want to check them out first.
Okay. And
but let me add to that too, Jenny.
Okay.
When you do ask for referrals, ask them why they like that company, and ask them why they chose that company versus a different company. What are the things that were pluses and minuses in their decision process? But do your due diligence. I'm sorry. Go ahead.
Okay, great. Yeah, of course. So last question, Steve asks, how do I know when I should start offering financing for my business?
Yesterday.
Okay, short and sweet.
Yeah.
The
sooner you can offer it, the better, because it's only going to help you. It doesn't cost you anything to get set up. The setup process, I will tell you, with every single one of these lenders, is a little bit painful. You're gonna have to get your paperwork together, because they are going to check you out and make sure that you're a legitimate business. They want to make sure that you don't have a better business experience. That basically, they're gonna look at whether or not you pay your bills, things like that. Because the last thing that a lender needs or wants is to have a contractor that's going to go out of business in the middle of a project. So what there is, and this may be going a little too deep, but there's a thing called holder in due course. So once that loan is made for that particular transaction, the lender is the one that's on the hook. So you as a contractor, if you don't finish the job, go out of business, you don't complete the job, it's missing a window, or product is faulty, and you don't go back and fix that, that's on the lender. So the consumer has peace of mind by using the financing, because they know that their job is going to be protected by the lender. But that's why the lenders they make it a little painful for you to sign up. I'm just be honest with you.
Okay. So we are ready to announce today's Google Home Mini winner, and today's lucky recipient is Genevieve Dion. Hope I'm saying your name right. But please email marketing@surefirelocal.com with your full mailing address, and we will ship that right out. Congratulations. So I want to give a huge thanks to Bruce and to all of you for taking the time out of your day to join us. And we really hope you learned something new and look forward to seeing you on more upcoming webinars. If you happen to miss out on the polls, I will be extending them, and you'll have a chance to hear more about how Surefire Local can help your business by emailing marketing@surefirelocal.com or visiting our website. So please take a minute to fill out the survey at the end and let us know how we did today and what topics you'd like to hear about in the future. Thanks, and have a great day.